The fate of the euro and perhaps the world economy hinges on the elections in Greece. Standard & Poor's ratings just yesterday saying there's now a 1 in 3 chance that Greece leaves the currency following the June 17th election. The Greek people, 1 in 5, are out of work, remain divided. The two main contenders, neck and neck. On one hand, there's the New Democracy Party, led by Antonis Samaras, promises to keep up the austerity that the EU, the IMF, and the ECB are demanding to get the bailouts and to stay in the euro. On the other side, Alexis Tsipras of the Syriza Party, the anti-bailout party, campaigning to renegotiate the entire bailout deal, making an exit from the euro a real possibility. So we're looking at how some Wall Street firms are gaming it all out. Credit Suisse says there's a 40% chance New Democracy winning, which means more austerity and pain for the Greeks, more bailouts. Greece stays in the euro. But there's also an equal odds that Syriza Party wins, which could lead to a euro exit, and a 20% chance of a stalemate. And then guess what? More elections. This is what happened a month ago. And Eric, it would be a very uncertain outcome, likely to keep investors rattled until another election.
So, Sarah, what happens if Greece does manage to form a new government? Does it really solve anything?
Not necessarily. Goldman Sachs spells out what Greece looks like post-election. Whoever is in charge of that nation, most likely, Goldman says, Greece will muddle through in the euro. In other words, it will stay, but it'll certainly have trouble sticking to all of the austerity demanded by Europe. But the ECB will keep funneling loans to the Greek banks. There's also a chance of a slow exit. That is, once everyone else, all the other nations, prepare and put up firewalls, slowly and surely the European nations can release Greece from the euro. There's also a chance at a fast exit, least likely according to Goldman Sachs, but most dangerous, and that is the entire currency would actually break up. And this is the 46-hour scenario that we've spelled out, from the close of trading in New York to the opening of markets in New Zealand over a weekend, to reintroduce a new currency, or the drachma. Eric, there are two big wild cards here, as you can see. Number one, who wins the Greek election? And number two, just how lenient Greece's fellow Euro nations, like Germany, will be in negotiating the bailout for that country.